who else could really use a cup of coffee right now? Monster for me, but same difference. Starbucks shares also looking like they could use some of that caffeine today after shares fell on the back of their second quarter earnings that pretty broadly failed to impress. Same-store sales, which have frankly been disappointing this quarter collectively for restaurant stocks, dropped at Starbucks 1% with a 2% contraction in the U.S. alone. Aside from that, there's a lot riding on Brian Niccol, and he has really been stressing this Starbucks turnaround plan, but says it's going to take some time. Niccol did mention, though, one theme that is weighing not just on Starbucks, but the entire restaurant industry, and that's consumer confidence. Are consumers still willing to shell out pretty big bucks for their morning cup of joe? Take Tuesday's consumer confidence report. It checked in at a total of 86 points. That was down for the 5th consecutive month. I'll say the expectations index stood out, falling 12.5 points to around 54.4, which is the lowest read since October of 2011. Plus, in the conference board's report, just a measly 15.7% actually expect business conditions to improve over the next 6 months. That dropped from around 17.8% back in March. And last but not least, GDP contracted for the first time since 2022, falling around 0.3%. Okay, now back to more food. We've heard from Starbucks, Brinker, Domino's this week. We will hear from our burger-focused restaurants next, with McDonald's and Shake Shack earnings out tomorrow. We will, of course, be watching any commentary on guidance or lack thereof, as well as consumer spending and also comps, as right now it's been a bit of a mixed picture as far as positive comps this quarter.